afternoon, everyone, and happy Monday. Welcome to Stock Market Today. It's Alyssa Corum and Justin Nielsen. We're going to break down the action for the major indexes today. Tech definitely seeing the most weakness, but not a great finish to the session either, Justin. And we're going to peel back and look underneath the surface as well to see really what this environment is entailing, and take a look at a couple of individual names as well that are going to help provide maybe some lessons for what's going on right now.
Yeah, so today, why don't we go ahead and we'll take a look at Steel Dynamics, ticker symbol STLD. We'll also look at Pioneer Resources in the oil. That reversed a little bit after trying to break out. That's PXD. And then we'll also take a look at Wayfair, ticker symbol W.
All right.
A little mix there.
Yes, definitely a little mix and a lot to get through in our markets section today as well. So the NASDAQ, very weak. Tech today down over 2%. So not a great start to the week.
No, not at all. I mean, the fact that we're back down below our 50-day moving average line on the NASDAQ composite, I mean, that's cause for concern. This has been struggling. This is the index that's been struggling the most. So it looks like it could still be in a corrective phase. Money just seems to be really flowing out of technology. The leaders of the past are just not what's leading right now. If you look at the S&P 500, a lot of people were wondering, hey, why did you go to uptrend, back to uptrend from uptrend under pressure last week? And the S&P 500 was really the reason why. We can't argue against an index that's going above and beyond and going back into new high ground. So that's what caused us to go back into an uptrend. And while it wasn't a great looking day for the index, it is still back, it's above its 10-day moving average line. It's above its 21-day moving average line. Or maybe it closed right at its 10-day moving average line. And then you look at the Dow Jones Industrial Average, and that was pushing to new highs, and it did reverse, did end up closing down for the day, but it doesn't look, I mean, this just looks like a day where it just needed to take a break because it's been getting overheated. And then finally, the Russell 2000, if you look at IWM, that one is back below its 50-day moving average line. So again, it's definitely showing that the risk on is not the play right now necessarily. The fact that small caps and tech are getting hit. But another thing that I thought was interesting today is if you pull up XLU, which is the utilities. So you could either look at the Dow Jones Utility Average or the Spider Utilities. That was showing strength today and has been kind of bouncing up, showing strength the last few days. And XLP, which is the consumer staples. So you want XLP. There you go. That's the one. Look at the strength there. So what's in the consumer staples? Well, it's Procter and Gamble. It's your detergents. It's the things that are typically thought of as defensive. Now these have not been where the action's been at lately, but you can see that there's some strength coming into these defensive names, and that's something that just you should be aware of. That's where money tends to flow when people are afraid.
Okay, well, we have been documenting the rotation out of tech, and I think a big question right now is that really going to infect these other parts of the market that have been leading? But let's take a look at Steel Dynamics, ticker STLD, which has really been going almost vertical, I think, Justin, after a very strong move out of this tight area. That's where we, we're putting it on Swing Trader. It did give back a lot of its gains today, but I mean, if you look at the weekly gain from just last week, look at that powerful move out of there.
Right, but this is, I mean, if you draw a trend line right there, I mean, this is definitely way beyond what it normally does. It's kind of gone beyond that trend. You can even do a longer trend line on that weekly and see that it's just, again, showing some really unusually strong action. And so steel, I mean, Ed on the IBD Live today, Ed Carson was talking about how iron was like up 8%, and steel has just been one of those, all the miners, steel, copper, even the rare earth metals. A lot of miners have been showing a lot of strength. You look at XME, and that's been an area of a lot of strength. That's the mining ETF. So between all of this, it's a matter of uh, when you start seeing like moves like this where it's getting a little crazy, then hey, be thinking of taking profits. On Swing Trader, we actually took this off. We were taking profits on the way up. We actually took this off because it was getting historically extended, and it seems ripe for a pullback here. Now, that doesn't mean that you just ignore steel completely. I mean, again, there's a lot of strength here, and this is what's working along with energy. But I would be concerned because this is a lot of days up in a row, and quite a move for such a short period of time, and unusual.
Most definitely. And we have been also talking about the oil and gas space,
Right.
seeing breakouts today, but PXD, at the very least, closed lower for the day by about 0.25% after looking pretty promising in the early going.
It was, and this is another factor here, is that you've got some of these stocks that are kind of making their breakouts a little bit later from some of their peers earlier. So again, you have to kind of just be weighing: do I have the leader or do I have the also ran? And I wasn't particularly bothered about the breakout this morning, but I did say that some of the early entries do provide you a little bit of a cushion sometimes. So there was an early entry as it broke above that 160 area. And so if you were buying there, today's action doesn't bother you nearly as much. I mean, granted, it's not good. We never want to see a reversal like this closing at the lows, but you're able to kind of stomach that a little bit better because this has been the area of strength lately, the oil and gas, energy, so that early entry would give you a little bit of cushion to maybe, sit through this a little bit easier, as opposed to if you bought at the peak today, you're down and you're now looking at, okay, where do I need to get out? Where's my line in the sand on this?
Right. And while this action today doesn't necessarily spell doom and gloom, it's not what we want to see. But if we continue to see it really break down from here, it could form a handle, of course. But
Right.
if the groups that have been working are starting to not work anymore, what does that say about where we're going to be looking for strength in the market from here?
Well, and it's not always about finding the next thing that's moving. Sometimes it's important to remember that cash is a legitimate position in your portfolio. When things are getting rough and tough, it you don't have to be always chasing like what's going to be the next thing. There is that saying like, hey, there's always a bull market somewhere, but that doesn't mean it's always easy. This is they have the old saying of sell in May and go away. That's not something I personally subscribe to, but when the market is getting tough like it is, you've got a lot more volatility in the NASDAQ. You've got this fits and starts where, oh, it looks like it's trying to break above a downtrend, but then it fails. You've got breakouts failing. It's just a tougher environment. And that just means you want to not be as aggressive. This is not the same type of market that we had in May of last year, where it was just showing such strength. The pullbacks were orderly. They were coming back to the 21-day moving average line on the NASDAQ, and then we were just powering higher. So this is a very different market, and you have to treat it accordingly.
Yeah, very wise words there, Justin. And let's take a look at Wayfair to cap off the show. A bit of a bright spot here today with the gain of over 5% in above average volume. We've been talking a lot about home furnishing peers of Wayfair, Williams Sonoma, RH, Floor and Decor, some of these other related names in this space. And Wayfair really hasn't been participating as much as those names to the upside. But now with this quarterly earnings report and a lot of volume coming into this stock to the upside, is now the time to get into Wayfair.
Yeah, so for everything I just said about trying not to, go after strength necessarily in a tough market, we still have to be aware of it, right? And Wayfair definitely, it looks like there is something going on here after its earnings report. David Hatman Chung was kind enough to send an article my way, knowing how my wife is, always, poking around these things. And I was asking my wife about Wayfair, and it does have a lot of this technology that it's using. I was stunned to find from this article that David passed on that they have like 3,000, engineers and such that are looking at, they have more engineers, software engineers and data analysts than Snapchat. So they really are trying to push the envelope in terms of some of the things they're trying to do with their online service, whether it's with AI or, using augmented reality to see what this furniture will look like in your home, in your
Mhm.
space. There's a lot of things that are interesting there. I think it's definitely gotten investors' attention. And so while it did close well off its highs today, it was a strong move back above its 50-day moving average line, breaking above that downtrend that you're showing. And I think definitely worth keeping an eye on.
Okay, well, we will do exactly that, Justin. Thanks so much for your insights today. Thanks for tuning in, everyone. We're going to be back tomorrow morning on IBD Live with more, providing you that up-to-date market insight and analysis that we are always on top of, and new ideas if and when they present themselves. So we hope you tune in, investors.com/IBD Live. We'll see you there tomorrow, and we'll see you back here after the close. Thanks again for watching.